Hello, hello, hello. For those of you who follow me or watch my videos and know I am actually in the office today. Check it out. So I normally am in my car, but I have some office time. I'm getting things done before I run to a couple of appointments. So something I am getting asked a lot and I'm seeing all over the place, and it's fairly common right now because of the craziness that we're experiencing in this market, is are we in a housing bubble? People are saying that it feels a lot like 2007, 2008, 2009 timeframe when things skyrocketed and then the market crashed. So let's talk about some of these factors. And I am going to be straight up front that I think it's going to depend on different economies. I think it's also going to depend on different individuals. Not everyone is going to be affected the same. And so let's talk about all of these factors and all of these points that are playing into this overall ideal thought feeling that people are having, and see if we can answer some of your questions. So first, let's talk about what a bubble is. A bubble implies something that's not sustainable, right? Because bubbles get bigger and bigger and bigger, and then eventually they just can't sustain and they pop. And when they pop, they go away or they deflate or get smaller. So bubblegum might be the only bubble that gets smaller when it deflates or when it pops. But you get the idea, you get the overall picture that the bubble is the idea that something just keeps getting bigger and bigger and bigger until it can't sustain itself anymore, and then it just goes away. So some things that are not sustainable that relate to the housing market. Number one is crazy, crazy low interest rates. Here's why it's not sustainable. Number one is that it's pushing this massive, massive, massive influx and rush of people to feel like, I gotta buy, and I gotta buy right now, and I gotta buy for the first time, I've gotta buy again, I've gotta buy a rental, I've gotta buy a vacation property. And so it's put this demand and stress on lenders, but also on real estate agents and then on sellers, because now that we have this massive amount of buyer demand over here, we also have less and less inventory. Some of that lower inventory has come from people just not feeling comfortable with COVID. So had COVID not happened, I think we would still be feeling some of this pressure, because people are feeling like, okay, I know cycles happen every 10 years and we've kind of been past that 10-year mark for a minute. So when are things going to start to come down? And we were already starting to see less inventory, but we were also getting ready to go into spring season. And then COVID hit a year ago. So here we are a year later, and we're seeing really the effects and downfall from that. Now, some of the other things that aren't sustainable, and let's talk about low interest rates on the side of the banks. Whoever's loaning that money has to be able to have it be worth their time and value and interest, right? A 2% interest rate is very, very, very low return. It's still more than you can get from, putting your money in a savings account at the bank. But typically people who are going to invest in these loans and back these loans want to see a higher rate of return, or else they're going to start investing their money other places as well. Okay, so that's one of the things. Another thing that's not sustainable is using up all of your cash and your savings in order to buy a house. So we're talking about first-time home buyers here. We're talking about people who are re-entering the purchase market, using up all of your cash. And right now, we're even talking about some people who are selling their homes to try and get into other homes. And we're going to talk more about if you should, if you shouldn't, buy, trade, whatever your situation is in this market. But using up all of your savings and having, next to nothing just to get into a home is also not sustainable. People are not going to be comfortable with that if that's the norm long term. The other thing is living month to month and the just on, paycheck. As housing prices increase, rents also are going to have to increase, because somebody owns that property, and whoever owns that property, and depending on when they got into that property and what their background and timeline is on that property, they're going to have to be able to make repairs, make mortgage payments. They're going to have to cover the expenses of that property. And so that's what that renter does. If mortgage payments are going up because property values are up, because interest rates are up, because of whatever the case may be, over time, those rents are going to have to go up. Now, historically, rents do not come down. If the market crashes, those rents stay the same. And more people end up having to rent if the market crashes because they foreclose or they short sell. They still have to go somewhere and rent. And so historically, once rent goes up, we haven't really seen it correct and come back down and go back up again. It still continues to rise. So those are some of the things that are just not sustainable long-term in a market like we're seeing right now. What are we seeing and have we been seeing in this market? We've been seeing a lot of cash come out from different places. Savings, investments, stocks, selling a property that has equity in it. All of these things, we've been seeing people be able to take the money out and just reallocate it and use it in a different way, in a different form, and put it into a home. We've seen a lot of movement nationwide, and that movement nationwide comes because people now can work from home. Companies and businesses are also having to say, okay, if we want to keep our employees, if we want to keep them happy, if we want to keep them keep the convenience, then we're going to make it more comfortable for them to work from home and work wherever. Now, one of the places that we're hearing of the most movement of companies is out of California. People are leaving California because a lot of the policies and the laws that are being put into place and already have been put in place in the past, and they're going to markets now that are more business centric. So you're seeing lots of businesses. Salt Lake has seen growth in businesses from California. Texas is a big one in the news right now as well. Arizona, Las Vegas area, Nevada. Some of these markets are seeing massive influx of business coming in from California. These California employers have either relocated their employees or they're giving them the option to stay in California but work remote. So we're seeing now this ease of transition where we've shown that people can work from home and that they can work from home and sustain the quality of work that they do and keep these businesses running and going. So I think it's great. I think it's a great shift, and we do have some good things that came out of COVID, because I think that's a trend people have been, they were on the fence for a long time of like, yeah, we know employees want more flexibility to be able to work from home, but we don't know if the quality of work is going to go down, or if people are going to be honest and actually do their jobs, or if they're just going to be out hiking and skiing all day. And so we've seen that it can be sustainable and that we can work from home in a positive way. So some of these things we've seen a lot of shifts, and it's come down to equity. And how do you get equity? One of the ways you get equity in a property is, me, for example, we purchased our home in 2011. We have a lot of equity in our home because we haven't cashed out, refinanced. We did do one small refinance to finish the basement, and that's all that we did, is we took that money out to finish the basement, and we've continued paying down on it. A lot of people are in that same situation where they bought, you only really needed to even buy as little as a year ago to be able to see equity and appreciation in the home. So you see equity happen because of appreciation, because of mortgage pay down, and also because of down payments. So when somebody purchases a home and they put a significant amount down, then that creates this gap where if the market crashed or went down a little bit, corrected, because it doesn't always crash, it can correct a little bit. If that happens, then they still have a buffer of room where if they had to sell their house, they wouldn't be underwater. They wouldn't have to short sell or foreclose on their property. And so that's another thing that we look at significantly. Now, in Utah specifically, up until about, I would say probably 2 or 3 months ago, we were seeing people come in with these heavy offers, and either, they were paying cash or had significant down payments. there are people now that I would say in the last probably 4 to 6 weeks have started waiving the appraisal, meaning that if the appraisal comes in low, if they have to do an appraisal because they're getting a loan on the property. So let's say we list a property at $450 and we get an offer for $450, but the appraisal comes in at $425. Because they've waived that appraisal contingency, they're going to come in and make up that difference and pay that $25,000 in cash. So with appraisal waivers, you either have to have the cash already to make up that difference, or you're using the equity from a home that you're selling. If you're selling a home, a lot of times you're trading the house that you're selling for the home that you're buying. And so if you're trading that equity, it's essentially dollar for dollar. But now if you have to pay the difference because that appraisal came in low, you're using up some of your equity. And so it actually decreases what you have in that property starting out as. So imagine this, I'm selling a home for $300,000. I have $50,000 equity. I'm going to put that $50,000 down on my $450,000 down payment. Now that the appraisal has come in at $425, I really only have $25,000 down because I have to use that $25,000 towards the difference in value of appreciation versus purchase price. There is a lot of pressure on appraisers right now. One of the reasons is because they're trying to keep up with the demand, because we know from economics, basic economics, that when there is a demand for a product, then the price can go up if there's a short supply. So because there's a short supply in inventory right now, and there's not a lot of homes available, but that we have this high demand over here from buyers, then that's what's causing the prices to go up. That's what's causing people now to say, okay, I'll offer you $30,000, $40,000, $50,000 more than the asking price to get into this property. So if we're using up all of our equity, if we're getting into a property with low down payment or no down payment, or we're having to use some of our equity, that's where things start to get concerning. Because if we did see a correction, which a correction would happen because people couldn't sustain their livelihood and needed to sell their house, and then buyers couldn't sustain their livelihood and didn't have the savings and down payment to buy a house, then we're going to see a lot of people sell and then less demand for buys, and that's when prices tend to go down. So we're just seeing a lot of these things now that the equity is starting to decrease, and people are having to use a lot more of their equity if they're trading, if they're trying to sell a property to buy a new property. First-time home buyers or buyers re-entering the market are having to use a lot of their cash. They know that they're going to have to pay over asking price and that the appraisal might not match that. The other stress I would say on appraisers is really trying to balance that. So we know that there's a demand for housing. We know that people are offering large amounts of money. And so what's that balance of how much true appreciation is versus people just trying to win offers? And so, like I said, there's a lot of weight on appraisers right now to keep things balanced and steady and moving forward. There's a lot of pressure on real estate agents to protect their clients and to guide and advise them well so that they don't end up in a situation where they have little to no equity and something shifts. Okay, another question I get asked a lot is, should I sell in this market? And my question, or my answer to this, is always with a question of what's next. And I think that really depends on, that makes the difference of should you sell. If you're trying to sell your property because you've outgrown your existing property, so let's say you're in a condo and you have 3 kids and you're just busting at the seams and need to get out of that property to upsize, yes, absolutely, it makes sense. There's a high demand for any type of property right now, but condos especially, because they're still affordable. Investors are looking for properties. There's just a lot of things around condos, townhouses as well, smaller single family homes. Those ones you're going to still see a huge demand for a long time, actually. So if you're busting at the seams and feel like I need to get out, then yes, it makes sense to try and buy something else. Just know that the experience you have on your property, if somebody offers you, a significant amount over asking price, and you're able to get more, you're probably going to have to mirror that same experience when you go to purchase something. So it's not that people are making $25,000 or $30,000 more on their house. You have to turn around and go offer that to somebody else to be able to secure the property that you want. So it is, I just always prep my buyers and sellers right now that if you're trying to sell a property and then get into something else, you're probably going to have to take that overage and just turn around and put it back on. So you're still breaking even. That's good. You don't want to be pulling money out of savings or extra money that you weren't planning on putting down. But you're going to have to probably use that in the same way that you did, you received an offer on your property. Does it make sense to sell your house and wait it out? I probably wouldn't. And that's just because we don't know. If we have 2 or 3 more really great years of appreciation in the market that we've had, I don't think it'll continue appreciating so quickly. We're at about 10% year over year, and different areas are more or at that 10%. But if you could have even 5% appreciation year over year for the next 2 or 3 years, and you're in a good, safe spot, and you're comfortable where you're at, I would still hang on to it. It's hard to speculate when things are going to change and happen. And so, I do know that real estate is a solid investment, and depending on when you bought and depending on your equity, if you've done a cash out refinance or home equity line of credit, that could affect things. So it really is worth a conversation, but the general saying is I would not sell your property to try and time the market and rent something. Rentals are also really hard to find right now. Okay, so should I sell if I have a rental property is another question that I get asked. And my answer to that is also another question of what's your situation in your rental property? Are your renters paying rent is number one, because right now we're still under moratoriums where the banks have to be lenient on owners of real estate that are using that real estate as an investment property, so renting it out to somebody else. If those tenants cannot pay rent because of hardships from COVID specifically, so the restaurant industry is a good example for this, because for a long time restaurants were closed. If you were hit hard because you worked at a restaurant and you can't pay rent, then the landlords have to work with you. Now, the banks have to work with the landlords, but they haven't said, hey, you're scot-free, you never have to make that payment again. It's forbearance, which means that they're on limited, they don't pay right now, but they're going to have to pay that back eventually. So whether they refinance it back into the mortgage payment, or pay it off when they sell it, somewhere that money is going to have to be made up. So if you own a rental property and you're just thinking, you know what, this is more headache and stress than it's worth, yeah, it makes sense to sell. We're in a market that has very high demand for properties, and so anytime we can help a buyer get into the property, it's going to be really, really beneficial that way. So it's kind of, I look at it as a win-win. If you're, tired of using your property as a rental, you're going to get top of the market, back on that property, but there are still laws and regulations that you have to go through, and there's specific communications that you have to have with the tenants as well to be able to legally sell that property, and it depends also on your lease agreement. So it's worth having a conversation over with somebody who's qualified to assess the situation and help you make a plan for sure. All right, should I buy in this market? And this is what I have conversations with my clients a lot right now too, is that it really, really depends on your individual situation. If you own a property and you are trying to sell that property to get into something else, like we already talked about, it absolutely makes sense to try and better your situation because you're trading dollar for dollar still. Now, if you're trying to get into something bigger, obviously your payment's going to be a little bit larger, but that down payment should trade itself out for what you sell your property for and then what you put down on the new property. If you're a first-time home buyer or if you're re-entering the market right now and trying to purchase without a property to sell, it's going to be a lot harder. And this is where I have individual case-by-case conversations, because if you're not going to be able to get an influx of $30,000 that you have to put down on a property just to secure it, and maybe even have to pay that much overage in cash, then it's going to be a lot harder to be able to enter the market. Are we going to have no inventory for forever? No, definitely not. Things always are ebbing and flowing, and this is a phase of the market right now. So here's the difference of a personal situation, and you have to look at your finances as well. But if you're trying to buy real estate today, for example, where you know you're going to have to maybe put down a larger amount, and then say you commit to $5,000 over the appraised value. That's $5,000 out of your pocket that you're paying on top of your down payment. So your barrier to entry has automatically increased now by $5,000 in this specific scenario and case. If you don't have that kind of money, it might make sense for you to wait to buy something. Renting is expensive and you're not getting a return on what you're renting. I totally get that and I appreciate that. But it's going to be a lot more stressful, and it's going to be a lot harder to try and purchase something without those extra funds to be able to secure a property. Now, if you have a really large and significant down payment, so let's say and now you have to also put another $5,000 down just to secure the property, or maybe that's the difference of the appraisal or something like that. Your down payment now becomes $25,000 because you have to use that extra $5,000 that's not going to be able to be put on top of the down payment. So you could pay a little bit more in mortgage insurance. If that's your situation, yes, I think it makes sense, because the mortgage insurance that you're going to pay over time compared to when you can drop it off or refinance absolutely is going to be a minimal cost. The other situation that comes up when we talk about this is paying cash on a property. And I think, of course, if you can pay cash on a property, it always makes sense to invest in real estate. The other thing that I show people, and I don't have it on a paper to show right now, is just that bell curve. So when we purchased our property, we purchased it in this price point. And as the market recovered, we were lucky to be able to purchase our home in 2011. And so things were starting to come back up. We have 100% appreciation on our property now from when we purchased it in 2011. So as things go up, they're going to continue going up. And so now we're at this point now where, like I said, we have 100% appreciation. If things drop down, the likeliness of them dropping down to the same value that we bought it for in 2011 is very slim. It's probably going to drop down to right here, which means if we haven't refinanced or we haven't pulled out all of that equity and we're not in a thin threshold, we're still going to be okay that if we need to sell the property, we're not in a short sale or a foreclosure situation. And then as things recover from here, now they're going to go up higher the next time around than they did right here. And so you just, see this curve, but rarely in economics does a number go up and then dip down way below the previous year. So it'll go up, it'll come back down, but then it'll go up higher than it did last time. And I remember it was about 4 years ago when we started seeing people were matching the values of their homes it was longer than that, probably 5 years ago. People were matching the values. So if they bought their home for $400,000 in 2007, it now was worth $400,000 again. And then it's continued to go up from there. So there's a little bit of your economics lesson in your forecast, and I hope that it makes sense, and I hope this paints a little bit of a picture of what's going on in the market right now. Does it make sense to sell your home? Yeah. But it's going to depend on your individual situation. Does it make sense to buy a home? Definitely. But it's going to depend on your individual situation. If you're trying to buy a home without another home to sell, and you have that down payment right now, and you know you're going to have to put more, you might buy a home in a year from now and not have to compete as much. Not have to do a multiple offer situation, and not have to offer that $5,000 more. You can continue saving for the next year and then be in a more comfortable situation. And so it really comes down to, what is your savings situation look like? What does your down payment situation look like? What does your income situation look like? What does your comfort zone situation look like as well? Because even though it could make sense on paper, it might not still be the right thing for you. Or it absolutely could be the right thing for you and you should have done it 2 years ago. There's that situation too. So if you have questions on your own individual situation, I am so happy to have a conversation with you and try to sort out some of these little details and pieces and put those puzzle pieces together. This is what I do full time. This is what I do all day, every day. This is what I do multiple times a month and a year, and I have for 11 years. And so I love this part of my job, the problem solving part of it, because that's the part that really helps people be able to accomplish their goals and dreams in real estate, is by putting those puzzle pieces together and making sure that the situations are right from them. So I hope this made sense. I know it's a lot of information and it was really, really long, but thanks for sticking with it, and call me or text me if you have questions and if I can help. See ya.